Now, the proposed amendments to the tax laws in the country are now raising concerns, with experts expressing reservations over the unintended consequences of the laws. The proposals, which include an amendment of the Income Tax Act, Value-Added Tax Act, Excise Duty Act, Tax Procedures Act, and the Miscellaneous Fees and Levies Act, leaving investors jittery over the operating environment in the country. Tax experts warn that though some of the proposals are welcome, others could see the operational cost of business increase, discouraging investment in the country. Jimmy Mbogo has more on the latest review by audit firm PWC.
The latest review of the Tax Amendment Bill of 2024 by audit firm PWC now shows that the replacement of the digital service tax with a significant economic presence tax increases uncertainty and operational cost owing to the imposition of withholding tax rates of 5% for resident and 20% for non-residents, potentially discouraging digital marketplace participation. In addition, the report says that the National Treasury is yet to adequately guide on registration and compliance for non-residents, levying excise duty on non-residential digital platform services. PWC now warns that an increase in excise duty on imported sugar will also see the cost of sugar rise from 5 shillings per kilo to 7.5 shillings per kilo, noting that this rise in the cost of sugar will contribute to inflation and increase food prices for households. Further, PWC argues the proposed shifting of items from zero-rated to VAT-exempt status remove the ability to claim input VAT credits. According to the audit firm, this could increase the cost for businesses along the supply chain and reduce tax neutrality, leading to higher consumer prices. The amendments are also expected to increase the complexity and administrative burden for companies. PWC argues that the frequent shift in tax treatment, such as moving items from zero-rated to exempt or taxable, makes long-term planning a challenge for businesses and investors. For instance, VAT exemptions on agriculture input and excise duty exemption for locally assembled electric vehicles are expected to support the transition. It is not all gloom. According to PWC, some of the tax proposals could be beneficial to a sustainable economy and encourage innovation in green industry, while the introduction of the minimum top-up tax under the OECD Pillar 2 framework ensures multinational corporations contribute fairly their taxes. Jimmy Mbogo, Citizen TV, Nairobi.